In the metals quadrant, the December gold futures contract has a two-day rally going, which helped to generate a slightly positive return on the week for gold after it was down 2.6% early in the week. It wasn't the most impressive weekly rally. After all, gold gapped higher on Sunday night and then pulled all the way back, almost getting to the prior week's open. But medium-term support held, and we closed above short-term support on the week with quite a bit of economic data coming next week. The high today, 24.6750, was up a little bit more than 0.5%. The low, 24.5610, down about 0.3%. We are finishing the day at about up 1/3% or so. Now, the rate cut story is still the main driver of gold, of course, its effect on the dollar. And the probability of a 50 basis point rate cut versus a 25 basis point rate cut in September is now pretty much even. You remember prior to that, we had an 85.6% chance, as per the CME Fed Watch tool, of a 50 basis point rate cut in September. That has now gone to about 51.49 as of the close today. With that sense of panic easing, the sell all assets crowd has gone back into the shadows, back into hiding, leaving gold as one of the best performing assets on the year, with the future still up over 19% year to date. So that's the current situation with gold. Now, seasonally, gold has very much behaved like its seasonal chart so far this summer, with sideways price action from April to June, a slight rally at the beginning of July, a small pullback at the end of July, and then a small rally and pullback at the beginning of August that we just went through. Seasonally, what follows through the end of July is a solid, although not spectacular, tailwind from seasonality that kind of lasts into the fourth quarter. Now, seasonality is not a trading strategy, but it's interesting that it has held true so far. We're going to be keeping an eye on tailwind through the end of the fourth quarter.